AT&T. Is this the stock that we need to buy? Is it the absolute steal deal of 2024? Well, this company has been a disaster track for anyone investing in this company for a long time. Is it time for the tables to turn and AT&T becomes the stock to buy in 2024? Well, we will find out right now as I do a deep dive stock analysis where we look at the financials of this company from revenue, net profit, return on invested capital, total assets and total liabilities. We'll look at everything in between with the P ratio, earnings per share. Yeah. And if you stay right to the end, I will give you the intrinsic value of this company, folks. Yes, potential intrinsic value. So stick around to the end to find that out. But we are going to go and do our work on AT&T, the telecommunications company, the giant that once was. Can it resurrect again to be a big company? Let's do it right here at Barry Charles. Remember to like and subscribe if you like this video. Let's go. Yes, welcome back, guys and gals, to the channel. In today's episode, we're going to do a stock analysis on AT&T. Well, yes, what has happened to this company? It's obviously telecommunication giant. It's the fourth largest in revenue in the world. It's the biggest wireless carrier in the USA. But what has been the cornerstone of this company been struggling? Well, it's been debt, baby. Debt all the way. Absolute debt has been a danger zone. They did one good thing. They split Warner Brothers away. That was a big struggling point, and then they eventually sold to Discovery. So that is something they have done positive. But can this actual company without Warner Brothers go on a search to the moon? Well, it hasn't so far, but can we see the turn of the tide with AT&T? And it's the time to see your money. If you've been in the stock for this long and expecting it to turn around, is it time to turn around, or is it a potential buy? Well, you wait till the intrinsic value comes up, and I'm absolutely stunned at the intrinsic value. It doesn't meet up with what's happening. So is this potential? Got to stay to find out. So let's go through it. Stock analysis on AT&T. Revenue. Yes, the revenue, a slight improvement, 120 billion to 122 billion. So that's not exciting. If you're expecting this company to grow to the moon, you need a lot more than that. But on the other hand, net profit went from minus 8.5 billion to 14 billion in 2023. So booyah! If they can continue doing that and jump up to 20-something billion and continue to jump that way, then exciting news for you. The PE of the PE is a very steady about 8, and earnings per share is 2.2 at the moment. 52-week range, where it's about 17 at the moment. It's about the middle of the range, $13.43 to $20.50 in the last 52 weeks is where the money's been going there. If we look at the 5-year range, folks, 21% down from 5 years ago, folks. So if you were in this company 5 years ago, you were down 21%. Not good, but I have seen worse, but it's not good. Especially for a company that should be every year just slightly going up. Dividend yields, 6.43%. So if you like dividend yield, that is right, but it was a lot higher before, so they have cut it. So this is something you need to look at. Dividend payment, 1.11 a year. Short interest, 1.27. I was a bit shocked. I thought it might have been a bit more in this company, but yes, interesting times ahead for this company. Market cap, 123 billion, so nothing to sneeze at there. Total assets has increased from 402 billion to 407 billion in 2023, going into this year. Total liabilities has gone down a little bit, which is good, 296 to 287 billion. So that's positive that the total assets is less than 100 billion in the total liabilities. So I mean the other way around. But yes, the liabilities is lower than assets, so that's very good. Debt's a big concern. Very, very, very big concern, and it's been a big concern for a long time with this company and why it's gone nowhere. With 130 billion, it has gone down. They've cut off 5 billion of it, 127 billion, but they really need to slash that more. And why they can't slash it more is because of the free cash flow. The free cash flow in 2022 is about 16 billion, and in 2023, by the end of the year, was 13 billion. So they really need to skyrocket this year if you want this company to go bonanza for you. Big concern, not enough money. That it would take them about 12 years to pay off the debt. Not good at all. They're going to have to turn it around big time. Shares outstanding, 7.15 billion. They have diluted you the last year or so. They used to be all right before then, but they've been diluting you, so that's not good. You're getting less money for the investment you have put in, if you put in previously. And return on invested capital, a meager 5%, which is probably better than what I was expecting, but they need a lot more if you want this company to go berserk. Yes. So, yes, what is happening with AT&T? Why is it not going to the moon? Well, clearly revenue. A lot of people like revenue, and that way their revenue just only went up a little bit, which I think is probably similar to what AT&T generally does, and it just goes a bit better. But their net profit was huge. Can they do their net profit again? If they do that again, they might forget about revenue and go, yes, this company is, even though their revenue is not skyrocketing, but at the bottom line, they're getting more for your buck. That's where you got to look. And maybe the dividend will go up. This is stuff you need to look at. Can they afford the dividend is another question you have to ask yourself when you're looking at the bear and bear case, and can they afford to pay it? That's things you got to look at. With the free cash flow of 13 billion, it's going down. They need that to go up. They need to give you back money for the shareholder with the share buybacks instead of just issuing more shares out there. So but the positives there, they've got more assets and liabilities. The earnings per share is good. Growth is probably the biggest thing for this company that you want if you really want to see a real big bang for your buck. But let's have a look at this intrinsic value, because I really got a bit complex. I have looked at this before and realized this before, but I refresh myself and go, what is happening? Why do they not like this company? Anyway, let's have a look at the intrinsic value. I use Trade Brains, Graham's calculators, very basic calculator that looks at current share price, earnings per share, growth rate, the current bond yield that changes variably, so you just change it whenever you need to. Gives you a potential intrinsic value on a simple level. Basically simple, and then you can look at the revenue and anything else you want to decide whether you think this is a potential investment for you. So let's have a look, and not financial advice. Let's go to it. Intrinsic value. Well, I'm going to look at the intrinsic value roughly where the company is right now. $17, 2.2, growth rate of 5%, and you think it's 5% for the end of time. You are potentially getting a steal deal because the intrinsic value of this company should be $42.40. Wow. Now, I know in the past that AT&T has always been lower, and something you have to think about with this 42.4 intrinsic value, it doesn't bring dividends into play. Okay, so that's just something you've got to look at a little bit. The dividend is a bit of a thing that brings down the price too. That's what you've got to look at. That's one thing that can skew a dividend stock to saying how come the dividend stock should be higher than. But that's just something you just got to think about when you're investing into stocks like this. If we go to 10% growth of everything the same, you look at $65.40 and the stock's $17. It looks like the steal deal of the century here, folks. If we go to 10%, if we up the earnings per share from 2.2 to 3.3 at a 10 growth rate, you're looking at $98. And then if we think they're going to double their earnings per share over time to 4.4 with a 15% growth rate, you're looking at $168 a share, so 10x from here. Wow. Can AT&T bounce to that sort of levels? I don't think so. Do I think it is a potential bargain? Yes, I do believe it's a potential bargain. But this company has seemed to always been one of those undervalued companies all the time. Okay, I don't know why, it just is the way it is. Meta's the same. Still, even though Meta has made this Meta-like rise, it is still under for where it should actually be. I like to always just give that example because it's one of the bigger companies out there that's always unders. Where you look at a stock like Apple and probably Tesla, they're more of a premium stock at higher levels than they should be most of the time. So that's just the thing you got to look at when you're investing into AT&T, that you probably got to go look at a little bit less gain than what you probably expect compared to other companies. It's not a big growth stock. That is the big issue. The net profit's growing. That's fantastic. But they've got to get their revenue going forward. If they can get their revenue going forward, then the potential for the stock to fly. I would say you're getting close to fair value. It's not exactly fair value. It's probably undervalued, but in terms of just where the stock really is. But I think you could easily say the stock will be a $30 stock one day. easily. I think he got no problems with that. 34, yeah, not sure about that, but $30, I think you could be pretty set at $30. So if you're wanting a slow burn eventually, maybe 10 years time, double your money, this is a potential stock for you. But for me, the only reason you play this stock is for a dividend, but then are they going to be able to afford the dividend, and they're going to cut it again at some point? That's the question mark with dividend investing, and that's what I've noticed in dividend investing. I'm currently in one stock, I have to be honest, NRY, and it's been an absolute disaster. Apart from giving me some dividend, it's been a disaster stock in terms of it going down, down, down. Now, I took it a bit of a risk play, as I thought it will go up as well. Potentially it will go up over time, but dividend stocks don't necessarily grow that well. I mean, there's like Johnson & Johnson and the likes that they do okay, but they're not going to make you that big 2x very quickly, 3x sort of stock. That's why I've taken a bit of risk on some stocks. NRY is definitely the worst stock, not the worst stock I've invested in, but the worst stock I am currently in. AT&T would fall into a similar sort of boat, but potentially it's a bargain, but it can be just a death trap for the end of time as well. I don't see it being a big skyrocketer. But as you said, if things change and the revenue goes up and they really turn into a smart business, hey, sky's the limits. But they probably, the net profit might have gone up, but I think you're going to start to see a plateau again in this company. And I suggest not to invest. But if you like AT&T and are in it, good luck to you. It's all your own investment. Do everything at your own risk. Thank you very much for joining me here, Barry Charles. I'll be back each and every week, 3 times a week, giving you a video so you can understand more about stocks. Have an awesome day out there.